Hey guys, what's up? This is Stock Retail coming back to you again. Hope you all had a great holiday weekend. Nice start to the market week yesterday, a little more rocky today based on kind of broad macros across the market. But to be honest, I'm still pretty happy where we are with some of the setup. Probably depends on how you look at the charts and how you feel about the day to day, but I think a lot of us have been here so long, day to day almost doesn't matter anymore, and we kind of see the big picture. Speaking of big picture, lately I've seen more and more of something. Frankly, it's not too new. We've seen this plenty of times before. We are being told by various trolls who may show up in your feeds. You've all seen this tweet where it's like, give it up, stop with the hopium, stop fooling people, move on, there's no more squeeze. Okay, so that's an opinion, that's a statement. We have our own opinion, but how about instead of talking opinion and gut and facts, we talk data? I often say, logic and data are your friends. So how about we actually go review that data and ask ourselves, if you think of the run, I'm going to look at actually April of 2021. If you think of the run from there until back then it ran to kind of 72-ish, we'll look at actually kind of a post-split adjusted number here. But a significant run from, let's say, April till June. What might that look like compared to now? What are the mechanics of the squeeze, sort of the data points compared to now? Is it worse? Is there no squeeze coming? Is it better? If you followed me a little bit by now, either, maybe you've seen me on Twitter, I've been around 2 years there, or you've started to see some of my YouTubes, you know that I'm going to stick to facts. I'm not going to spread hopium. So hopefully you can kind of sit back and go through this data, and then I'll give you the chance to sort of fact check it for yourself. So we've all got a lot of money on the line. Wouldn't it be great to review the facts, like I said, and instead of arguing or getting worried by trolls or whatever, let's just go ahead and tear this apart. So we're going to look at the price. We're going to look at the short interest itself as both a percent and in shares. We're going to look at the cost to borrow then versus now. How about AMC's revenues, right? Like, the health of a business certainly matters in a squeeze. It's a lot easier for shorts to attack a business going bankrupt versus a business bringing in more money. So let's just look what's different then versus now in terms of the box office, and then obviously concessions is a big part of the business. How about AMC's debt? Better or worse then versus now? Why don't we take a look? Market liquidity, just the overall market. How's it doing? What's the health of the market? We all talk about margin calls. Are people farther away or closer to kind of having leverage problems and liquidity issues? Days to cover, that's certainly a pretty significant squeeze metric. Probably ought to look at that. And then maybe talk about some other things. So first, let's just remind ourselves what even happened. So I just picked this date in April for a couple of personal reasons, just to get out of the way. And you can even go back and look at the historical charts and even the history of the short interest. I could have picked even far more favorable dates than this. So just to be clear, this is not a cherry-picked date. There's actually a reason I picked this date based on some things I've seen out there recently and just kind of for fun. But just to be clear, if I wanted, I could have picked an even more favorable date, but we'll go with this. So you can see the price, April 5th is what I'm showing you, was 620 at the open. And then you can see by, I think this was June 3rd, if I recall correctly, we ran to a high of 44.61. That from open until high was a 620% gain. So that's the first thing of people saying, well, you can never get there again. Well, I mean, first off, it's happened. It's happened before. So when people say, oh, the price is so low right now or whatever, this is a split adjusted price you're looking at. So it compares to basically where we are right now. So that's just really interesting. Let's just kind of start with that as the framework. We had a run like that before. Could a run like that ever happen again? So I'm going to go through all that data. I've got some screenshots here that follow, and I'll kind of, as usual, I'll share the sources. I say around here, there's no trust me bros, at least in my circles. We don't trust bros. We trust data, we trust facts, we trust DD, and we trust ourselves and our own conviction. So I will not ask you to trust me. I'm going to show you where I've got all this. All right, so what was the situation? So on April 6th, and I would have, compared to April 5th there, but this is just the data I have. So I showed you that price point from April 5th, but close enough. April 6th here with the short data was 15% total shorted as a percent of the float. Now I wanted to compare the float, right, because we have more shares now than we used to. So comparing apples to apples means we need to look at the percent of the float that was shorted, and I'm going to show that. So you can see that was 76 million shares. and you'll see the shares don't compare so well. You can see we got a lot more shares shorted now, but really the percent of the float that's shorted is 22%. So, that's interesting. We have more shorted now by 47%. There's 47% increase in the percent of the percent of the float that is shorted now versus then when we had that big of a run. So we squeezed, and some people even like to say that was really a gamma squeeze, not a short squeeze. We can argue that and talk through the data of that on another video. But we did some kind of squeeze to, you remember, like 72, or I showed you if you want to talk split adjusted, kind of in the 40s, from a 15% of the float was shorted. Now we're at 22%. That's a 47% increase, so we're going to give that one a big fat green arrow. Now is more squeezy than then. Okay, but how about the rest? Because Shorty's telling you, give it up, it's hopium. Well, how about the cost to borrow? That sure would matter, right? I showed you in another video that I confirmed with my broker, if I were to loan out shares, and don't worry, apes, I don't want to do that because I don't want to give my shares out for them to short our stock. But if I was to loan out my shares, E-Trade was saying they'd pay me roughly 40% a year on an annual rate for the whole year, but that's actually paid out daily. So whatever that is, you got to kind of divide by how many trading days or whatever. Actually, not trading days, just total days of the year. But they're paying out cash daily. Shorts are burning cash daily to hold their borrowed shares. So what is that costing them? Well, back at April 26th, the average cost to borrow from Ortex, and again, I'm going to show you all my sources here, so you don't have to trust this, bro. The average cost to borrow was 10%, and the max cost to borrow was 39%. Well, we all know, of course, this depends on what time and who posted, but the Ortex data I saw from this morning was the average cost to borrow was 135%, and the max cost to borrow was 305%. Well, that is a 1,250% increase on the average, and almost a 700% increase in the cost of the max. So clearly far, far, far more squeezy now than it was then. So I'm giving that 3 big fat green arrows for basically saying it's way, way, way more squeezy now than it was then in terms of cost to borrow. All right, well, let's look at the business. So daily box office. You can go validate this at Box Office Mojo. There's a lot of other places you could go. Just Google domestic box office, which actually, by the way, I'm also doing Shorty a favor here because I'm comparing domestic to domestic. But if you follow Avatar right now, you'll see it's better than 2 to 1 in terms of the revenue that's international versus domestic. So it basically turns out to be kind of a more favorable comparison. And actually, I'm even going to show you that I'm going to look at even a previous quarter. But let's get into this. So daily box office for Q2, which is when April was, of 2021, was $8.9 million a day domestically. But in the current quarter, and like I said, I'm going to show you some other data too, but in the current quarter, we're tracking at $21.35 million a day. That's an increase of 139% increase. So it's 239% total of what it used to be. So basically 2.5 times what it used to be. And that's, like I said, not even using kind of how Avatar's tracking even better internationally. If I was to compare international versus international, you'd see an even bigger growth. So the box office has grown by a ton, more than doubled. So we're going to give that 2 big green arrows. Box office tracking more than double now what it was then. That seems like a pretty big deal. How about concessions? So that quarter, AMC had $162 million roughly of concession sales, food and beverage sales. I am using, you can see here, Q2 versus Q2 so that we can kind of compare apples to apples. So, but that's really important to note because I'm looking at last year Q2. It's almost a year behind us now. And you know that things have improved. You also know that because of inflation, we're paying more for food. So I'm giving Shorty another kind of favor here where I'm comparing to a lesser quarter than if I was to look, if we do this again this April and I compare April to April, this is going to be even more favorable. But you can see just even a year ago basically was also more than double when the squeeze happened. So concessions, food and beverage sales is tracking at 145% 2022 versus 2021. And I'm sure this year will be even more. So 2 big green arrows on that one. So far, short interest, cost to borrow, the box office, just the movie revenues, food and beverage revenues are all way, way, way better now than they were then if you're rooting for a squeeze. How about debt? Shorty likes to talk to us about debt a whole lot, don't they? We had that squeeze when the debt was at $5.2 billion for AMC, with a lot less revenue, as I've just shown you. Know what our debt is now? 4.92. That is a reduction of almost $300 million of debt since the last big squeeze happened, or 6% less debt than we had then. And I'm going to source that again. No, trust me, bro. I'm going to show you where I got that. So I'm giving that a 1 green arrow because it's only a 6%. It's a single-digit reduction, but it is $300 million of debt that's been reduced since then. So more squeezy now than it was then. How about liquidity risk? We're going to go a little subjective here, but we'll talk about this. So in 2021, at that point, we were still in a bull market. Kind of go back and track the movement of the whole market if you want. Look at any of the indexes, look at our stock, look at other stocks. We were in a bull market then, but right now, and so I'm just sourcing from the IMF, but also a few other kind of data points. So I'm going to show you an article here even in a minute. Per the International Monetary Fund, so financial liquidity risk is far worse now than it was then. We know about the Fed tapering, we know about interest rates, and just the entire macro environment is a lot worse if you're sitting on a leveraged position. So now I'm talking about margins, margin calls, all of that, so the mechanics behind that. So that's far worse for shorty, which means it's far better for us. I'm just giving that a single green arrow though, just because it's a little subjective. How about days to cover? So pretty big. Study that, guys, if you haven't yet. That's a pretty important metric in the squeeze. Most of you probably know it by now, but it's kind of a measure of how much volume it's going to take shorty to get out of their position and what sort of it's going to do in terms of upward price pressure if they were to try to exit their position as well. So back then, we had basically the run up to June. At that point in April was 2.1 days to cover. How about now? 6.6, guys. We are more than triple, so 214% increase, or you could say it's 314% of what it was. We've added 4.5 days. It was only 2.1 days. We've increased by 4.5 days. So that gets 2 big fat green arrows. Days to cover is far higher and far squeezier than it was when we ran to 72. How about everything else? Well, think about the visibility we have in terms of just social awareness. The entire country knowing what's going on with us, the entire world knowing what's going on. We spent 2 years yelling about this. Look at the engagement we get on all the social platforms. Look at the media talking about us. Think about the education we all have. We know there's DOJ kind of criminal proceedings going on. We know the SEC is aware, even though we're not thrilled about how they're acting, and I'm putting that mildly. But just the amount of awareness, visibility, and education from then to now, and the amount of hodlers, I would say, how many apes are involved, I'm giving that a green arrow. So every single one of these, and some of these pretty exciting, right? Short interest is higher, cost to borrow is way higher, the movie industry is way healthier, AMC is making more money and selling more food and beverage, debt is lower, shorty's dealing with a tighter, sort of less liquid market, days to cover is higher, and kind of on these subjective other metrics, it's better. So let me just show you kind of a few things, just so you can later kind of check where I got some of this. So you can see, like, here was the Ortex view from April 6th of 2021. You know, pause this and screenshot that if you want, or you can kind of go find that from people who've posted it. Also looked at Fintel, so there's some data from Fintel you can see. Sorry for chopping this. The screenshot I had basically had a ton of dates, so I just grabbed the top and grabbed the bottom, just so nobody thinks that I photoshopped that. But you can go find that on Fintel. Ortex from just this morning, so a lot of you would have seen that already. That IMF report I mentioned, so here's kind of that quote. This is just from October, but we all know things have frankly gotten worse since then. Financial stability risks increased, so that's kind of IMF's own quote. Like I said, I'm going to source that here in a second. So just conclusion, by every single meaningful metric, AMC is more squeezy now than it was when we ran to 72. And let me show you that sort of split adjusted. Sorry for all the clicking. mean, that was a run from, I'll show split adjusted, from 620 to 44.61. And we're more squeezy now. I don't know if that doesn't, I guess it's a crude term, but I gotta say it because we're apes, right? If that doesn't jack your teats, I don't know what will. So I think that's really critical to know. Return to data, return to logic, trusting bros and listening to Shorty, that's not the way. Studying, doing DD, this is DD. I just went and found all this information. That's exactly what DD is. So trust the DD, trust the data. Dang, this is exciting. As always, let me show you some sources. So I mentioned I got the short interest from Ortex and Fintel. You can go check that. I got the cost to borrow from Ortex. Box office revenues. I mentioned Box Office Mojo. I'm kind of putting an asterisk here on both concessions and box office revenue. That on some of those, I'm also comparing to. So I'm comparing to Q1 for the box office revenue. I'm comparing to what's happening right now. But remember, Q1 is our smallest quarter of the year. So I'm giving Shorty a really favorable comparison there. And even with that, you saw how much higher we are in revenues, more than doubled per day than then. And just wait till Q2. If I was able to wait and do this video and compare versus Q2 box office, it's going to be even bigger. And then just concessions, kind of the same type of deal. I compared that to an old quarter. We know we're selling more, but I already talked about that. Debt, so I took the 10Qs, so that's an SEC filing. You can get that either on the SEC's website, go to something called Edgar, and you can look up AMC's filings, or I just went and downloaded it again from the investor relations site at AMC. But then also note that so I took the Q2 21 filing and then our most recent filing, which is the Q3 22. Because they haven't filed Q4 yet, right? We don't have the annual report yet. So I took the most recent filing, but then I also subtracted out, kind of in my own local spreadsheet I've got. They've had a few press releases since then where they've said, okay, we paid down more debt. Like, the Antara deal where they just paid another $100 million of debt down. So that's where I'm kind of getting the math on the debt from then till now. And you can go fact check all that if you just sort of pull that and look at those. So I'm showing you where to go get that if you want to check up on me. And then market health. So I mentioned I got some information from IMF.org, but all you got to do is kind of Google, like market liquidity risk or market health indicators, those kinds of things. And then just other things I was thinking about. So I mentioned Twitter trending. We know about the Archegos suits. We know about the FTX kind of legal action ongoing. All the hedge funds, like Iceberg and Melvin and Citron that have kind of gone bankrupt. A lot of the media reporting. We know there's a lot of focus on us. So that's really it, guys. But I just want to arm you with the facts. I want to arm you with the ability to go fact check for yourself. And frankly, I think it's a win if you do fact check me because I'm not so much worried about me, right? I know what my level of integrity is and what my intent is. But even if you're fact checking me, that's teaching you how to fact check the trolls and Shorty and all of that. And you will never be FUDed again. So here's a bit of anti-FUD. Could we squeeze again? Is our price too low to reach those levels again? I think I've shown you we did it before on a far less squeezy scenario than we are now. So let's go.